Hello everyone, welcome to Options Doug with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for education purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. And just a note about Discord, I'll talk more about that in just a moment. This is one of the many benefits of joining Discord, having access to this chat room if you're interested in options, as well as a number of other chat rooms for futures, stocks, also in a variety of languages, crypto as well. And I'm also on X, formerly known as Twitter. So again, Bookmap is Discord, encouraging everyone to join Discord. You do need a Bookmap subscription, and you can, there is a free subscription available. So if you have a paid or a free subscription, you'll need to validate that with your email address. You can scan this QR code for more information and join us in Discord for a much better experience. Here are the key tenets to my approach for trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. Certainly in the large cap tech stocks that I trade and follow, like the Mag 7 stocks, as well as the equity index futures, like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades, and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned to the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset and the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Hector, Stephen, welcome, glad you're here. Here's my agenda for today, Friday, September 13th. First of all, I want to go over news items, economic data, and events for today, then a preview of next week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. And just to note, I have a guest stock setup that I want to go into more in depth today. That should be interesting. And then finally, I'll cover the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's start with economic data for today. The only data release, the higher impact data release, was the Michigan Consumer Sentiment at 10 a.m. This is the ES Futures and Bookmap, and I'm going to show the reaction. This is the 10 a.m. data release. If you're looking at a candlestick chart, that would be a big candle. So big move up and down, finally resolved higher, came back, tested that trend line, continued to move higher. All right, so that was Michigan Consumer Sentiment. That came in just slightly greater than expected and also greater than the previous number. All right, next week there are several key data releases. I'll talk about that on Monday. And then the big events for the week, of course, the FOMC meeting, an announcement on Tuesday at 2 p.m. Then the press conference begins at 2:30 p.m. Note the announcement comes in the middle of my webinar on Wednesday, and then I will stop whatever I'm doing at that point, and we'll cover the S&P 500, the NASDAQ live, watching the reaction to the rate announcement. And yet, also next week, big monthly, quarterly options expiration. More about that next week. So big options expiration next week on Friday. All right, that is the news items for today and a little bit of a look ahead to next week. All right, let's move on to positional analysis. I'm going to start with the S&P 500. So again, this is the ES Futures and Bookmap. And before I take a closer look at this chart, I want to take a look at a higher time frame. I'm going to go to the underlying index, that is SPX. This is a one-day chart in SPX going back 1 year. I know we've all seen this chart before. Just quickly, starting in July, this correction began on the Wednesday of the VIX expiration. That was 3 days before the July monthly options expiration. And on August 5th, SPX made a low of 51.19. That was after the weekend yen carry trade unwind. Let's pick that up now with a 1 hour chart. SPX 1 hour chart. There's that 51.19 low. And SPX rallied up, then consolidated between around 55.60 and 56.50. Last Tuesday broke down below that level. Found support just above the 5,400 put wall. That was the put wall at the time. And the support was actually the SPY 540 put wall. And then this, what I'm calling this hockey stick pattern, oops, wrong. Hockey stick pattern reversal. I did post this in Discord. That was Wednesday this week and seemed to coincide with comments that Jensen Huang made at I think a Goldman Sachs conference. He's the CEO of NVIDIA, about ongoing demand for their AI chips. So there had been some concern about NVIDIA, and his comments seemed to spark that rally. Now back up into this consolidation range at the top end of it. All right, let's take a look at levels on this chart. First of all, the dashed purple lines are showing the lower, keep grabbing the wrong tool, pen tool. All right, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. Note SPX trading well above the upper weekly expected move. The dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. I do post those levels in Discord every day the evening before. So now SPX is trading up above the upper daily expected move, as well as the upper weekly expected move, in a continuation of this trend that began Wednesday morning. All right, the dark red lines on this chart, let's zoom in on this just a bit so we can see this more closely. All right, the dark red lines in this chart are Spotgamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers. They're shown on a variety of trading platforms. Again, this is Thinkorswim, a 30-day, 1-hour chart. I'm going to point out the key daily levels. First of all, the put wall is at 5,500. That's a strike with the largest net negative gamma that can be expected to act as support. Note that level did move up from 5,400 yesterday. It had been in that level for a while. The next level up is the volatility trigger at 55.15. That is with the label VT there. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. And this week, gamma notional has shifted from negative, helping to fuel those big moves earlier this week, to now positive. So firmly positive. In a positive gamma environment, market makers have to trade with against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And we'll take a look at that. We'll see that in the price chart. This we'll see that in a 1-minute chart in just a moment. So this rally, as gamma notional has shifted from negative to positive, is starting to slow down in a more mean reverting, slower grind up, as SPX is trading well above its volatility trigger in a positive gamma environment. The next level up is the absolute gamma strike. That's the label L1 there. That's a strike with the largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. That level also moved up from 5,500 yesterday. And finally, the call wall is back up at 57.50. That's a strike with the largest net positive gamma that can be expected to act as resistance. And that level also moved up from 5,700 yesterday. So for SPX, the put wall, call wall, and absolute gamma strike all moved higher. So a bullish hat trick for SPX today. And then for SPY, the volatility trigger did shift higher. So bullish hat trick for SPX as far as shifts and levels go. All right, let's wrap up our view of SPX with a 1-minute chart. This is 3 days worth of data. There's that reversal Wednesday morning again coinciding with the comments that the CEO of NVIDIA made about continuing demand. And note how this rally is starting to slow down as gamma notional again has shifted from negative to now positive. All right, let's take a look at just a quick look at levels today. So again, here's the upper daily expected move. And it looks like SPX is trading, chopping up and down around that level, still kind of grinding higher. We can zoom in on this just a little bit more. So again, SPX trading now above the upper daily expected move, also above the volatility trigger. All right, let's go to Bookmap now. So in Bookmap, I have my own cloud notes. So I can show SPX levels. Key level for today, 5,600, acting as support. I'm also showing SPY levels on this chart. And for example, here's the SPY 560 large gamma 2 level. That was support after the 10 a.m. Michigan consumer sentiment data release. So earlier today, 5,600 acting as support. Then the SPY 560 level acted as support. ES is trading above its upper daily expected move. I do calculate that separately from the SPX upper daily expected move. So the next level's up. That's a SPY combo level, as well as the SPX 5650 level. And that 5650 level would be the upper range of that previous consolidation. All right, so slow grind up, positive gamma. Maybe heading toward the 5650 level. And I'll talk about setups in a few minutes. All right, note there is a difference in price between ES and SPX. Today it is somewhere between 4 and 5 points. I'm using 4.5. So I'm showing SPX 5600, the support level, at ES 5604.5. And note on Monday, I will roll over to the December contract. I believe that's the Z contract. So I will roll over again on Monday. I'll be using the Z contract, the December contract, and that ES to SPX difference will widen out substantially, probably about 60 to 65 points. And that will, Spotgamma calls it contango bleed, as the next expiration approaches in December. That ES to SPX offset difference will slowly grind down towards zero. All right, that is the S&P 500 levels in play for today. Key level for today, 5,600, acting as support. All right, let's take a look at NASDAQ. This is the NQ Futures and Bookmap. And I want to take a quick look at the underlying index charts. I'm going to go to QQQ first. Here's QQQ. Regular trading hours in the dark shaded portion. Really, there was no clear support this morning at any key levels. Note that 475 is a large gamma 3 level. All right, so that is QQQ. No clear support. And let's take a look at NDX. NDX here on the downside, this is the 450, 19,450 absolute gamma strike as well as the call wall. Price was chopping around this. That was the 19,500 level, which is a large gamma 3, and then 501 combo 3 level. So really with both the QQQ and NDX, no clear support today. So just like ES, I have my own cloud notes. So I can show QQQ levels as well as NDX levels, and then also key NQ levels. There's the upper daily expected move. Looks like NASDAQ is heading up toward that level. Again, more about setups in a few minutes. And for NASDAQ, there were a couple of shifts in levels. The NDX and QQQ volatility triggers both shifted higher. All right, so just slightly bullish shifts higher in levels for NASDAQ. All right, let's take a look at some setups now. Actually, let's wrap up our positional analysis by taking a quick look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day for the S&P 500 and NASDAQ. Note now, all these numbers are positive. This indicates for an index that what Spotgamma assumes traders are short calls, market makers are long calls, hence the positive gamma. They have to trade against price to hedge their delta exposure. So as price moves up, they're selling futures, and as price drops, they're buying futures. That is typical in a positive gamma environment. And again, as I pointed out on the SPX 3-day chart that I looked at, how this rally has started to slow as gamma notional has shifted from negative to positive now. Still grind up in a positive gamma environment, but not with the velocity of the last couple of days. All right, so based on this, my thesis for the day, first of all, looking for lower volatility. My directional bias was bullish based on the shifts higher, the bullish hat trick in SPX, and also the shifts higher in volatility triggers for SPY, NDX, and QQQ. All right, let's move on now. I want to start with some setups. I'm going to take a look at the indexes first. Then I want to go to my guest stock for the day, Oracle. I'll talk about that in just a few minutes. But let's start with the S&P 500. So as always, I'm going to start by taking a look at what options traders have been doing today. And to do that, I'm going to look at the hero signal. That is the HIRO, Hedging Impact Real-Time Options. This is provided to Spotgamma subscribers. What this chart is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. There are two lines on this chart. The white line is the price for SPX, and the purple line is the hero signal, again showing options trades, market maker hedging activity for those index components. So this is the index signal for the S&P 500, and a rising hero signal indicates traders are taking positive delta options positions. They are buying calls and or selling puts. And a falling hero signal indicates traders are taking negative delta options positions. They are buying puts and or selling calls. Market makers are always taking the opposite side of those trades, and they hedge their delta exposure by buying and selling ES futures. All right, there's another signal that we can take a look at for the S&P 500. So this is the index signal. This is the equity signal. What this chart is showing is options trades and market maker hedging activity for a combined signal of all 500 stocks in the S&P 500 index. And note this chart is often the Mag 7 plus 493. And this morning, this is pretty typical. I thought the index signal did provide more clarity up until about 10:30 when the equity signal started to provide more clarity as traders started taking positive delta positions in the Mag 7 stocks as well as the other stocks in the S&P 500 index. So let's go back now. Let's start with the index signal. I'm going to go to full screen. So you can see pretty clearly traders were taking positive delta positions from the open up until about 10:25. Flow alert comes in just after the cash open, gets your alert, gets your attention, signaling significant options activity. Note the sharp reversal right at 10:25. Good signal to exit any longs. Also look for a short. Didn't last long. That's when we'll take a look at the equity signal in just a moment. That's when the alert came in on the equity signal, and the equity signal took over, starting to move higher. All right, let's go take a look at Bookmap. Go back to the S&P 500. All right, so this is the ES Futures and Bookmap. Let me zoom in just a little bit more. All right, so let's take a look at the signals in Bookmap. 9:30 cash open. ES finds support. This was actually at the 5601 level. The volume dots of Bookmap show market buy minus sell. Magenta dots indicate more sellers than buyers. Sellers exhausted that level. Aggressive buyers start to come in. Price breaks above VWAP. Then the big move of the 10 a.m. data. ES finds support at the SPY 560 level, just below VWAP. Moves up to the upper daily expected move, 1025. That's when traders start taking negative delta options positions. It looks like some large traders were fading that move with iceberg orders they used to hide the size. Note the drop in the light blue line on the subchart. So the ES reverses just above its upper daily expected move. As again, traders start taking negative delta positions. That only lasted for about 5 minutes. And you can see the aggressive sellers starting to come in, shift from green volume dots to magenta volume dots. Sellers are exhausted. Traders start taking positive delta positions in the S&P 500 equities, and price moves higher, back up above the upper daily expected move. All right, so that's the S&P 500. Took a lot of patience to trade this today in a positive gamma environment. There were better setups in stocks, which were also a lot. There was a lot of grinding and sideways action as well. All right, let's take a look. Let's go back to Hero now. Go to the equity signal. All right, so here's what I mean with the equity signal. Flow alert comes in. Traders start taking positive delta positions. Let's shift to puts and calls. I'm going to have to jump back. All right, so this is where the clarity comes in. Also looking at separate puts and calls in in the equities. You can see from the open, traders are buying calls. A little bit of a peak there. Flow alert comes in. Traders start buying calls. Price moves higher. And now it looks like call buyers in the equities are continuing to drive price higher. All right, that is the S&P 500. Let's take a look at NASDAQ. So there are two signals that we can take a look at for NASDAQ. This is the index signal, showing a combined signal of options trades, market maker hedging activity, and NDX and QQQ. Call buyers clearly driving price higher in NASDAQ. So that is the index signal. Let's take a look at MAG 7 signal. And again, this did not provide much help until about 10:30, when traders started buying calls in the stocks known as the Magnificent Seven. So that's what this chart is showing: options trades, market maker hedging activity for a combined signal of Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. Let's go back to NASDAQ signal. Go to the NQ futures. NASDAQ also in positive gamma, slow grind higher. Zoom in on this just a bit. So it looks like at the cash open there were some large traders buying with iceberg orders. Then as price moved higher, aggressive buyers came in. You can see that with the rising cumulative volume delta. Also buy stop orders helped to fuel the move higher. That's shown by the rising yellow line, buy stop orders fueling that move higher. Pullback after the consumer sentiment, another pullback to that level. All right, NASDAQ seems to be stuck. Let's go back. All right, there we go. Sorry about that. So NASDAQ chopping around between the 19,500 level and the upper daily expected move. All right, let's take a look at some stocks. All right, Hector asks, since we are in a positive gamma environment, so what does we mean? S&P 500, NASDAQ, market makers trading against price, trading above call wall. So again, what do you mean by we? Are you looking at NASDAQ or S&P 500? All right, NASDAQ is trading above the NDX 450 call wall, but below the 480 QQQ call wall. I consider the 480 QQQ call wall much more important than the NDX 450 call wall. All right, so that is I'm not really considering the NDX call wall that much. So more of a, I guess, a hypothetical question. All right, let's move on. I want to take a look at Oracle. All right, this is the guest stock of the day that I wanted to talk about. Hector, sorry, when the S&P 500 gets above the SPX or SPY call wall, I can talk about that then. So keep that question in your back pocket and then bring it up again when the S&P 500 is above its call walls. All right, so here's the stock of the day, Oracle guest stock. So let's take a look at some things. Let's go into more depth on this. So first of all, let's take a look at a one-day chart for Oracle. Zoom in on this just a bit. So it's been a wild week for Oracle. Jumping up after reporting earnings. They've been talking, CNBC has been talking about Oracle all week. And you can see this big reversal bar today. All right, so that's Oracle. Now let's take a look at some background information on Spotgamma Equity Hub. So let's go here. Here we go. All right, so this is Spotgamma Equity Hub. I'm looking at Oracle. I'll look at several charts here. When a stock rises like that, that is typically driven by call buyers. This is the composite view chart in Spotgamma Hero. The green area is showing call domination, so really above 141 here. Spotgamma's option structure, the Oracle's option structure, is dominated by calls. You can also see that on the put call impact chart. Let me zoom just a little bit. Let's go back and check that chart. So the high was right around 173. So in the put call impact chart, note the orange line for calls is below the blue line for puts, indicating again call domination. Also note the steepness of this line. We'll look at the call line is the rate of change of gamma, and notice price approaches 173, 174. The slope of this line really starts to flatten out, indicating market makers are fully hedged to that position and they will no longer need to hedge. So that is, you could look at that as a top end for price. And that's exactly what's going on here. So call dominated. Oracle jumped up to the top end of price, right around 174. Also, we can take a look at, this is the history, showing a 10-day history of the key daily levels. Also, what I'm looking at here is this next expiry gamma percent. That's about 35% that expires today. So we know that Oracle is call dominated. Calls are expiring today. We'll see in just a moment traders are selling calls and also price dropping. When traders buy calls, like they've been doing this week, market makers sell the calls. They have to buy stock to hedge their delta exposure. As those calls start to lose value due to price dropping, traders selling calls. Charm, that is the rate of change of delta as, that's the change in delta as time passes. So expiration approaching, a lot of calls expiring today. those calls are quickly losing value, and market makers can sell their long stock hedges, all helping to drive Oracle lower. I'm going to go back to full screen. Go to Oracle. Zoom in just a bit. So it took a little while. There were a few call buyers. Initially call sellers, few call buyers. They gave up, started selling calls again, put buyers. So the orange line is showing calls, falling orange line, traders selling calls, falling blue line, traders buying puts. Price was trading above the 165 call wall and traded below that. Next level down below is the 160 key gamma strike. So that's one way that you can look for opportunity here. Knowing this, how Oracle has been in the news, this strong reaction, and then the call domination, and just watching Hero and seeing that traders are selling calls. So let's go to Bookmap now. Go to Oracle. There's the opening print. Looks like there was a little bit of a move up before the cash opening print. Aggressive sellers start to come in. Price immediately drops below VWAP as traders buy puts and sell calls. Price breaks below the 165 level. Now next level down below is the 160 key gamma strike. All right, so that's Oracle. Any questions about that? Hello, oh boy, welcome, glad you're here. Oh boy asks, what are the actual options tactics that you use to trade long, short? Are you selling premium using SPX, ES, or SPY options? So when I trade options, I do not like to buy a call or buy a call spread or sell a put spread short term. I think skew, especially in the index, the S&P 500 index, skew does not favor any of those trades. But I will buy a put spread or sell a call spread in any one of those components. And for stocks, I typically trade shares. And I guess if I want to go long short term, for any S&P 500, I would favor buying SPY shares rather than SPY options. All right, that is that's Oracle. Any questions about Oracle? Otherwise, let's take a look at some other stocks. First stock I want to take a look at is Amazon. And let's go see what options traders are doing. This is just to illustrate a point, a pretty typical pattern. Aggressive call buyers at the open, quickly take their foot off the gas, and price consolidates. So really, call buyers driving price up in the first 15 minutes, and then that is now it looks like call buyers coming in again. Typical pattern, call buyers right at the open, take the foot off the gas pretty quickly. Price consolidates and moves lower. So there's that quick move up. Call buyers take the foot off the gas at the liquidity. Those are limit sell orders. That's the heat map of Bookmap showing a history of the limit orders in the order book. Call buyers take the foot off the gas, Price absorption at that level and moves lower and consolidates. All right, so that's Amazon. Next one, Google. Similar pattern. Let's see. Go to Google. You zoom in a little bit. All right, so call buyers in the morning up until about 10:15. And they, instead of just taking the foot off the gas, they start selling calls. There's that peak, the call signal peak. It took a while, but NVIDIA did reverse lower as the call signal made a lower high right around 10:45. Let's go back to Bookmap. Call buyers take the foot off the gas. Price moves a little lower than consolidating just above VWAP right now. Let's take a look at Meta. All right, for Meta, 527.50 is the call wall. I just drew that line in. Right there, a call wall. That acted as resistance a few minutes after the cash open. Now it looks like it's acting as resistance again. Let's see what options traders have been doing. Let's go to Meta. Zoom in on the morning. So in this case, it looks like price started to reverse higher. Around the same time as traders started selling puts, buying calls, then the aggressive call buyers came in a few minutes later and abruptly took their foot off the gas. Right around 9:45, flow alert signals that shift in the hero signal. So options traders, call buyers, and put sellers take the foot off the gas as price reaches that 527.50 call wall and price consolidates. So, oh boy, one way you could play this, if you're trading options, if you see this reversal right at a level that you expect to act as resistance, call buyers take the foot off the gas, flow alert, key resistance level. Good way to play that if you want to trade options is to sell a call spread or buy a put spread. In that case, selling a call spread, for example, 528. Well, I'd have to check an options chain. Probably Meta would have options expire today at the 2.5 point range. So you could sell a 527.50, 530 call spread, or a little bit safer, a 530 call spread, and all price would have to do is remain below that short strike. So that's a way to play a pattern like that with options. That's the way I would play it. All right, that's Meta. Let's take a quick look at NVIDIA. Pretty choppy day in NVIDIA, up and down. 120 call wall, key gamma strike up above. At the open, traders are selling calls and buying puts. Price moved lower right around 10:30. That is, remember, that is when the MAG 7 signal and the SB equity signal started to move higher. That's when traders started buying calls and selling puts in NVIDIA. Didn't last long. All right, let's go take a look at Bookmap. Go to NVIDIA. Pretty choppy day in NVIDIA. There's the 120 call wall key gamma strike. Price has not been able to reach that level. Let's take a look at Tesla. Very bullish move up in Tesla right after the open. Let's take a look and see what options traders have been doing. Let's go to Tesla. Options traders really driving price in Tesla today. Aggressive call buyers at the open, also put sellers. Take the foot off the gas, reverse lower right around 9:45. After that quick move up, 10:30. Start buying calls again, selling puts. Price moves higher. Note this time, flow alert helps to signal that this reversal about 11:30 as traders again start selling calls and buying puts. Price moves lower. So up, down again, all driven by options traders. Let's go take a look at Bookmap. There's the quick up. Whoops. Quick up, traders buying calls, selling puts. Up above the 230 call wall. Price reverses lower as they take the foot off the gas. 10:30 reverses higher again. And the 11:30 reverses lower. So good trading opportunities here in Tesla. Let's see what options traders are doing right now. Go back, we'll zoom in a little bit on Tesla. So it could be another reversal lower, this time right at the 230 call wall key gamma strike. Take a closer look at Tesla. Here's the 230 call wall. This time, as traders started taking negative delta positions, they started selling calls and buying puts at that level. Price is broken below VWAP. You can see all the aggressive sellers starting to come in, all the magenta volume dots. So we'll keep an eye on that. Oh boy says, so that would be selling premium on a possible daily top? Yes. If you want to trade options, that would have been a good setup in Meta. You know, something that I would do, selling a call spread. All right, so you could do the same thing on Tesla here. Selling a call spread to, if you wanted to be get the maximum amount of credit with a short at 230. All right, so for Tesla, trend break, traders taking negative delta options positions, aggressive sellers starting to come in, Price breaks below VWAP. Looks like that was a nice short. All right, we'll come back and check on this. Let's check on the indexes. So now it looks like maybe the S&P 500 is starting to roll over a little bit, breaking down below the upper daily expected move for ES. All right, Hector asked, if possible, could we observe gamma expiration for Monday rollover? I don't think that information is going to be available, and I'm not. That's not something that I would typically look at. So let's take a look at. Let's go to SPX. All right, so I'm not sure why you what you mean by Monday rollover. Here, this is the next expiry gamma percent, and that's going to be the big monthly expiration for SPX. Let me close full screen. And we can take a look at SPY. Scroll over to the right. Well, we can see it here. So for SPY, about 70% gamma, that's what's showing so far, expires on Friday, next Friday, big monthly options expiration. Now what we can do is rank this watch list. This is my watch list. And oh boy asks, zero DTE partial profit taking after that initial sorry, I can't read that last word. There's something obscuring the chat. Yeah, so traders definitely are taking profits, but if you're referring to that meta trade that I was talking about, yeah, I would take that in zero DTE options, taking advantage of that. Again, reversal at the call wall, alert, and option call buyers taking the foot off the gas for a short call vertical in meta. All right, so Hector, I'll talk more about this next week. Toward the end of the week, on Friday, definitely, I'll talk about a call gamma unwind next week. And what I'll do is I'll rank my watch list by next expiry gamma percentage. Right now, this is only showing Coinbase at over 30%. But that will, more of these stocks will show next expiry gamma percent. Note this is actually for today. So a lot of stocks have gamma expiring today, but that will be next week. That will all be on the 20th, and it will be larger percentage numbers. So we'll take a look at this next week. All right, so it looks like some call buyers starting to come back in Tesla. Let's go to the S&P 500. S&P 500 traders starting to sell calls. And the equities also starting to sell calls. NASDAQ, they've been selling calls and buying puts. Mag 7. Let's go back to Bookmap. Here's the S&P 500 rolling over. Some aggressive sellers starting to come in. Looks like some large traders are buying this with iceberg orders. Let's go back and check on Tesla. Remember, the orange line was starting to move higher. Maybe not. This may be just a pullback. Let's go back to Hero. Go back to Tesla. Now, I would say call buyers starting to come in. The overall trend for the call line is still moving up. So it looks like that was just a pullback in Tesla. Better moves typically in stocks are definitely in the morning. Take a look at NASDAQ. All right, last call for questions or stocks. All right, everyone, I'm going to wrap it up. I want to thank you very much for watching. Thanks for your questions and comments. Everyone have a great weekend, and we'll gear up for a big week next week with the FOMC. Everyone, again, have a great weekend. Thanks for watching, and I will see you on Monday. Bye.